Stop scrolling. If you own 1 ounce of silver, 1 share of SLV, 1 mining stock, 1 paper contract, you need to see what appeared on the COMEX tape at 4:14 a.m. Eastern this morning. Because what looks like a victory is actually a trap. And the number $100 is the bait. I'm Joe. This is Financial Joe Alert. And today, March 12th, 2026, I'm here to save your portfolio from the smartest, dirtiest, most calculated counterstrike the bullion banks have made in 40 years. Yesterday I told you JP Morgan dumped $4.7 billion. They surrendered. The shorts were finished. That was true. It is still true. But what I'm about to show you is the second move, the counterpunch, the system fighting back from the floor, and the stakes are over $17 billion of your wealth on the line. Let me show you the smoking gun. At 4:14 a.m. Eastern this morning, the CME Group quietly amended the silver futures margin requirement. They raised initial margin by 38%. They raised maintenance margin by 42%. They did it without a press release, without a Bloomberg headline, buried on page 3 of a regulatory filing nobody was supposed to read. That is the confession. Wait, it gets worse, because raising margin doesn't just hurt the shorts. It hurts the longs. It hurts the small traders. It hurts every leveraged retail account in America holding silver futures, hoping for the moonshot to $100. Every leveraged silver long account in this country just received a margin call while you slept. This is the trap. They can't beat you on the metal, so they're trying to break you on the leverage. For 40 years, the bullion banks ran the same playbook. Sell paper, suppress price, crush retail. That playbook is dead. JP Morgan buried it yesterday. So today, they wrote a new playbook, and it is darker than anything we've seen in this market's history. The new playbook is called Force Long Liquidation. Here is how it works. Step 1. Let the price rise. Let the retail army get euphoric. Let CNBC put silver on the front page. Let the leveraged accounts pile in at $58, $62, $68. Step 2. At the moment of maximum euphoria, raise the margin requirements. Force the leveraged longs to either post massive new cash or sell. Step 3. When they sell, the price drops violently. Step 4. The banks who survived yesterday's massacre cover their remaining shorts at a discount paid for by retail blood. It is a pump and dump. But the pump was you, and the dump is them. This is the mathematics of betrayal. Wait, it gets even worse. Because the $100 number is no longer a target, it is a trigger. The CME margin schedule contains a clause. When silver crosses $100, margin requirements escalate again, another 50%, automatically. No vote, no notice. The closer we get to $100, the more retail longs get force liquidated. The price you have been waiting for is the exact price designed to destroy you. $100 silver isn't the finish line, it is the kill zone. Now I need you to understand the David versus Goliath shift here. For 40 years, Goliath was the bullion bank, JP Morgan, Citi, HSBC, the naked shorts. David was you, the stacker, the retail Joe. Yesterday, David won. The shorts surrendered, but Goliath has a brother, and his name is the exchange itself, the CME, the clearinghouse, the infrastructure of the casino. Goliath, the bank is dead, but Goliath, the casino, still owns the building, and he just changed the rules of the game while you were celebrating yesterday's victory parade. When you can't beat the player, change the rules. When you can't change the rules, change the table. When you can't change the table, burn the casino down. Rewind that line. Send it to a friend who owns silver, because that one sentence is the entire 2026 silver thesis in one breath. If you are a Joe who held physical silver through this entire war, you are safe. The trap doesn't touch you. Physical metal in your possession has 0 margin requirement, 0 counterparty risk, 0 exposure to overnight rule changes. That is why we stack physical. That is why Joe wins. But if you are holding leveraged futures, margin-funded SLV, 3x silver ETFs, you are exposed to the trap. You are the prey. I need you to subscribe right now. Ring the bell, because in the next 72 hours, the strategies I am about to share will determine whether you walk away with generational wealth or get liquidated at the worst possible moment in financial history. This is the Joe Alert. This is your moment to act. Now let's talk about the geopolitical explosion, because the CME did not raise margins in a vacuum. They raised margins because Beijing did something terrifying yesterday afternoon. The People's Bank of China announced the launch of a Shanghai-based physical silver settlement contract, denominated in yuan, backed by sovereign reserves, settled in metal only. No paper, no cash settlement, no leverage above 2x. It is a direct competitor to the COMEX, and it just went live. Wait, it gets even worse. If Asian institutional buyers shift their silver hedging from COMEX to Shanghai, New York becomes irrelevant. The CME knows this. They are panicking. The margin hike isn't just a trap for retail. It is a desperate attempt to preserve order in a market being colonized by bricks in real time. This is currency warfare, and silver is the battlefield. Now let me explain why the system trap is mathematically failing. Even with this margin hike, the CME can raise margins. They can scare leveraged longs. They can engineer a temporary sell-off. But they cannot create physical silver. They cannot fill the COMEX vault. They cannot satisfy the 92 million ounces standing for delivery. When the leveraged longs sell, institutional buyers will absorb the supply at lower prices. Sovereign wealth funds will accumulate. Industrial users will lock in supply. The sell-off becomes the entry point for the smart money. Within 14 to 21 days, the price will recover. And it will recover with stronger hands. Hands that don't sell, hands that don't margin, hands that take delivery. The trap eats itself. Here's your 72-hour roadmap. Step 1. Today, review every leveraged silver position you own. If you cannot post 50% additional margin tomorrow morning, reduce your leverage now, voluntarily, before the CME forces it on you. Step 2. Tomorrow, convert margin-funded silver exposure into either physical metal or unlevered miners, companies with low debt, companies with reserves in stable jurisdictions, companies producing today, not next quarter. Step 3. Within 72 hours, establish your buy the trap floor. Decide the exact price at which you will deploy reserve capital when the leveraged longs get flushed. Mine is $51. Yours might be different, but have the number written down on paper. This is how Joes win wars. Discipline, plan, execution. If you're with me, type physical only in the comments right now. We are separating the disciplined Joes from the leveraged tourists today. The stacker army doesn't get margin calls. The stacker army doesn't sell at the bottom. The stacker army takes delivery. Wait, there is one more thing you must know. The SLV ETF prospectus contains a clause, section 4.3, page 27, that allows the trustee to suspend redemptions if extraordinary market conditions exist. JP Morgan is the custodian. JP Morgan just lost $11 billion yesterday. JP Morgan is desperate. This is why this channel exists. This is why Financial Joe Alert matters. Because nobody on CNBC will read you the prospectus. Nobody on Bloomberg will explain the margin clause. Nobody at JP Morgan will warn you about the trap. Only Joe will. If you got value from this video, real, actionable, save your retirement value, hit subscribe, ring the bell, share it with one person who holds silver, because the next 72 hours will be brutal, and informed Joes survive. This is your identity. These are the stakes. This is your action. The reward is survival on the path to generational wealth. Let me close with this. You were right about silver. You held the line. Yesterday, the shorts surrendered. Today, the system tried to trap you. Tomorrow, the smart Joes will buy the dip. Next week, the price will recover. Next month, $100 falls. Next year, $200 becomes possible. But none of it matters if you get liquidated on a margin call you didn't see coming. Physical, unlevered, patient. That is the Joe playbook. That is the winning playbook. That is the only playbook that survives when the casino changes the rules at 4:14 in the morning. The bullion banks are dead, but the exchange is wounded. And a wounded exchange is the most dangerous animal in finance. Tomorrow, I'm dropping the deep dive on the SLV redemption clause and the 3 alternative silver vehicles the smart money is rotating into right now. One is up 23% this week. None of them are on CNBC. Subscribe. Ring the bell. Because if you miss tomorrow's video, you might miss the rotation of the decade. You held the line yesterday. Hold it smarter today. I'm Joe. This is Financial Joe Alert. And the silver war just entered its most dangerous phase. See you tomorrow. Stay physical, stay patient, stay free.